Welcome back to BLOCKTV. It's time for Crypto Crunch, where we dig deep on some of the top stories making headlines in the sphere. This week, concerned voices grew even louder as Coinmetrics, via a headline in Bloomberg, exposed to the world the degree of concentration in ownership of US dollar-pegged stablecoin Tether, with worrying implications. As it turns out, only about 300 entities control around 80% of Tether. This coming at a time when scrutiny is at an all-time high, with investigations by the New York Attorney General of Bitfinex and iFinex, the stablecoin's parent companies, and concerns of market manipulation from inside crypto traders. We speak now with Idan Yago, founder of Cement DAO and an expert in stablecoins, who joins us from London. Idan, thanks so much for joining us.
Thanks for having me.
All right, so let's start simple. Is this degree of concentration really cause for concern, or is this something just to be expected with this sort of industry?
I think it would be very surprising if we didn't see this degree of concentration with Tether holding. If you think about it, there's three uses potentially for a cryptocurrency, right? One is speculative or as a store of wealth, so something that people want to hold. Another is for payments, and then the third is as a medium of exchange for exchanges. And with Tether, the only real use it has is to be used on exchanges. And indeed, even on exchanges, people typically don't hold it for extended periods of time. So what that means is that almost all the Tether is on exchanges. Nobody wants to use it for payments. Certainly nobody wants to hold it as a long-term store of value. And so the 300 entities that own most of Tether don't actually own it themselves. They're holding it on behalf of their customers.
So what you're saying is really what we're seeing here is not the ownership by a few who are manipulating a market, but rather the exchanges sitting with their pools of Tether that belong to the various people trading on their platforms. And this really is just an expected move of the market as it should normally stand in a healthy situation.
Right, it's primarily exchanges. So there's roughly 400 there's roughly 400 exchanges that use Tether. And in addition to them, there are a number of funds that hold funds for other people. So those are the big addresses. If you look at the biggest holders, Binance are sitting on something like $500 million to $600 million in Tether at any given time. Huobi are the second largest holder with 400 million. And then other large, primarily Asian exchanges have also multi-hundred millions of dollars in Tether that they're holding. And so that's the vast majority of the Tether. It's not owned directly by the exchange, but is held on behalf of the exchange customers.
Okay, and now, but going beyond the holding and the concentration issue, I suppose, bringing back up this investigation that's going on by the New York Attorney General of the parent companies, Bitfinex and iFinex. Now, when this came out, there was a concern, a bit of a rush away. The Tether itself seemed to drop for a little while, but now everything seems to have calmed down. Everything's back to normal. It's back to its pegged value. I mean, is this something that the market should be paying more attention to, or is this ongoing investigation not really cause for mass concern?
I think it's an extreme cause for concern. So I'm not concerned about the problem of concentration. I'm concerned about the potential for Tether holders to lose access to their funds effectively overnight. And that would be due to regulatory action. And we've seen this happen in the past already. We've seen $850 million worth of Tether's funds being confiscated in 3 different countries on the behest of what appears to be US authorities. It was on the basis of that Tether launched the Leo token in order to raise funds, in order to recapitalize Tether. And we've seen similar things happen in the past in other industries as well, in the online poker industry, in digital cash, even funds that are held overseas. If a company is indicted by US authorities, those funds can be seized, even if the company is not yet being prosecuted, but is merely under investigation.
And the concerns that people have that Tether still doesn't really have the one-for-one reserve holdings that they claim to be able to have for their Tether coins. I mean, is that really a genuine cause for concern, or do you think that's another issue that's perhaps being blown out of proportion?
I don't think that's that much of a concern. Whether or not Tether have one-to-one backing is a relatively small concern, because even if they do have one-to-one backing today, they could lose it tomorrow. So, for example, the vast majority and possibly all of the funds that are held on behalf of Tether are held at a bank called Deltec. And if the US authorities, for example, the New York authorities, were to go after Deltec and say that for the purposes of protecting the New York customers of Tether, they needed to seize those funds, that is potentially something that could happen. We would never know that it is about to happen until it actually happens. And then regaining access to those funds could take many, many years. In 2011, funds were seized from online poker websites on behalf of US customers, and some of those US customers still have not received those funds back.
Well, that seems to me a pretty damning concern in an industry that's so sort of pinned on this right now. As you say, if so many of these massive exchanges, so many exchanges hold massive amounts of Tether, do they not put themselves at great risk should the funds be taken and Tether lose some of its inherent value? I assume if, as you speculate, those large amounts of funds were taken overnight and the one-to-one reserve backing was lost and that became public knowledge, Tether would plummet in value, and that could be a great risk to the industry as a whole.
Yes. So I think that's absolutely a concern for the people who hold Tether at any given time. The reason they hold Tether is because they want to see the potential gains from speculating, but they're taking on probably more risk than they realize. And for the industry as a whole, for the exchanges, while they're not directly exposed because they're holding the Tether on behalf of their customers, something like that would be extremely damaging to the reputation of the exchanges that are substantially reliant on Tether, and would substantially impact the entire crypto space. So you could expect the prices of all coins, not just Tether, to drop. Now, I'm not saying this is going to happen or even that it's a likely scenario, but it is certainly a possible scenario, and I wouldn't think it even that improbable, which is one of the reasons it's important for us to work towards greater diversification and greater risk protection and awareness in the stablecoin space.
Do you think Tether, as its position now, is central or critical to the entire ecosystem and structure of the current cryptocurrency marketplace?
Oh, there's no question. The volumes of trade in Tether are second to none. Only Bitcoin competes in terms of the amount of transaction volume on exchanges and trade volume. The holdings in Tether represent the most significant holdings of US dollars outside of US customers. And East Asian, primarily Chinese traders and speculators are almost wholly reliant on Tether in order to get fiat denominated and dollar denominated liquidity on exchanges. So Tether have done something really phenomenal for the industry. They've created a way to hold dollars without having a bank account. They've demonstrated a new way in which cryptocurrency can be useful, but because they're under substantial regulatory scrutiny, there's substantial risk to Tether, and it's something that we all need to be aware of.
Now, I don't want to peddle in conspiracy theories here necessarily, but there's one thing that keeps coming up in relation to Tether, which is this correlative notion that many analysts have pointed out, that every time a large amount of Tether, usually around the $100 million mark, is minted, we see spikes, at least short term, in Bitcoin and often in other cryptocurrencies in the market. Some say this is a concern for manipulation of things going on behind the scenes in what is a very opaque industry that lacks a degree of transparency. Do you think there's any credibility to this claim, or do you think this is just conspiracy theorists peddling their wares?
Well, academics have done a statistical analysis of this. I forget the exact group that did it. And they didn't find that there was statistical evidence for this. But beyond that, we would expect to see substantial printing of Tether when there was substantial buying of Bitcoin, because that is the primary way that many, many customers access the crypto world. It's the way they get funds into the crypto world in order to buy Bitcoin or other cryptocurrency. So, you know, even I kind of watch the printing of Tether to try and get a sense of where the market is. I think it's quite a big leap to go from there to say that there's been manipulation. Overall, I think that Tether and Bitfinex team have done about as good a job as possible in a very difficult regulatory environment of keeping the ship afloat and trying to be transparent where they can. I think they could be more transparent, and I think they certainly haven't eliminated the risks to their customers. But I think overall, we should consider them to be doing as good a job as is possible given the current environment.
What about when we saw the situation where back in June, I'm referring to, where Tether accidentally minted, I believe it was $5 billion, only to half an hour remove that amount back. I mean, I wonder if that smacks of a sort of a lack of professionalism, perhaps a lack of awareness in the industry. You know, many attributed that to someone hitting the wrong number of zeros, but really, it seems a little bit of a cause for concern if that's the standard at which it can happen when things are already going onto a blockchain where it's immutable and forever. Now, obviously, as I said, that money didn't actually enter circulation; it was removed before that happened. But the fact that it's on a blockchain meant everyone was aware that that had happened. Doesn't really look very professional for Tether.
Absolutely, it was extremely embarrassing. It's, the fat fingers problem. Somebody put in too many zeros. They weren't typing correctly. I can guarantee you that this happens at banks all the time. It happens at financially regulated institutions all the time. The difference is that when it happens on a blockchain, it's public. Everyone sees it, and it's deeply embarrassing in a way that it would never be. So in a way, Tether is actually more transparent. Certainly, they're not perfect. And the level of professionalism that we would want to have from the custodians of multi-billions of dollars is sometimes lacking. But I actually don't think that this particular instance is an indication that they're not managing Tether correctly. What I do think is that it points out, both the risks of Tether and possibly its advantages. It is very different from a decentralized cryptocurrency. It's fully centralized. There's one administrator, and they can create or destroy Tether as they see fit. And so in that respect, it's not a classic cryptocurrency.
Yeah, certainly it definitely doesn't fall into that decentralized ethos, but as you say, it may perhaps be providing a very pivotal role in the market, perhaps just one that has a little bit of too much risk associated with it. But I want to thank you, Idan Yago, founder of Cement DAO, for helping to break down this complex issue for us regarding this stablecoin, the stablecoin industry as a whole. It is a very interesting field and one we'll continue to watch closely, so stay with us at blocktv.com for all the latest in news and information. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter.